Hey everyone, thanks for tuning in. I'm Crypto Vatsik. I would really appreciate it first if you hit that like button to support the channel. And if you do find this content helpful, please don't forget to subscribe so you don't miss out on future updates. As always, this is not financial advice and are my opinions only. All right, let's go. Okay, today's going to be an educational video, and I'm going to explain to you in detail what market structure means and why it is so critical in monitoring a trend and potential reversal of a trend or temporary reversal. I'll discuss breaks in market structure and a few set of clear rules to follow that make sure you won't get caught in false breakouts or you're using the system incorrectly potentially. So all these things can put you at risk and put your capital at risk at losing money or potentially missing out on the next major opportunity. Okay, so super quickly before we get into real examples, what is market structure? Market structure is a simple set trend of higher highs and higher lows. Okay. Okay, so pretty simple. Higher high, higher low, higher high, higher low, higher high, higher low, right? And it's all in comparison to this guy here, right? So these highs, okay, this is a higher high to this high, okay, and then this is a higher high to the previous highs, right? And then higher low, right? So there's a higher low compared to this higher low, and then on and so on and so on. With clean moves, clean breaks above the previous high, okay? And we'll get into that more with Japanese candlesticks, but basically clean move, a break above the previous high and close above, and then higher high, higher high, okay? So now, what is a break in market structure? A break is when you break the rule of this trend, okay? Of this higher high, higher low trend structure is when you come down and you make a lower high, okay? So let's pull this down here for now. Sorry, my phone's going off. Okay, so higher high, higher high, higher high, our final high here, okay? And then higher low, higher low, higher low, whoops, lower low, okay? So for those of you that like diagonals, you can also see it this way, okay? Broke the diagonal, but ultimately I like levels and ranges. And so I'd be looking at it on a price level, and we have a lower low in comparison, okay? And so now, if we did something like this, which is not untypical in crypto, okay, is you'd say, okay, well, we followed the rules. Higher high, higher high, higher high, higher high as well. And then, oh, look at that. We made another higher high, okay? And you'd say, oh, okay, we're still in an uptrend. Yeah, sure, we had a dip, but we made a higher high. Okay, we've seen this recently just with our top at 69,000 Bitcoin. Okay, and that's when the candlesticks come into play. Is you need to see a clean break of the previous high of that level. Okay, and you need to see a clean break above with a bullish retest, something like that, where it would continue upward after. Okay, and so if we barely squeak by, or say perhaps it's just a wick, so if it looks something like this, where the candle makes a higher high in comparison to this high over here, okay, and a big wick, and you say, okay, yeah, listen, look, we got our higher high, we technically hit this price, okay, we're still in an uptrend. This is not a confirmed break of this level, okay? And in conjunction with this, you cannot forget that over here we made a lower low, okay? We have broken that overall higher low structure. And though we reclaimed this level quite quickly, okay, I'm talking about, clean break of that, okay? So we're talking about at least 2, maybe even 3 candle closes on high time frame. We're talking like 12-hour, maybe even the daily. I would prefer to stick to the daily candle closes, okay, above. And then this is basically just a failed swing failure pattern that I would expect to just come down much further, okay? It's basically a failed breakdown of that trend. And you see this oftentimes in cryptocurrency, and it can really fake a lot of people out. Now, if we got something like this, okay, where we make a higher high, but then we come back down, we break market structure, okay, then we get a temporary downtrend. We break that market structure, okay? We're getting a bearish trend down here, okay? And we bottom out, and on a high time frame macro scale, this could just be a higher low when zoomed way out, okay? But if we start to see something like this, which we typically see in strong bullish trends, where we reclaim the level, okay? Reclaim a key SR level, which was support or resistance previously, and we flip it back to support and we start to have some sort of bullish consolidation like this, then that would scream to me that this is not over. The trend is still up. We've had our dip. We've reclaimed that level and we're going up. Okay, so we'll get into some real examples now of how that looks. Okay, so here's a really good example on Bitcoin USDT back in 2020 when we had the beginning of really this long bullish trend. Okay, and so here's just a couple of really quick and simple examples of what I'm talking about. So basically right here, okay, we had this candle, we made our high of this wick, okay, and we obviously created this base near the top of this candle, okay. So we made our high, and let's take it from the wick, from the high up here, okay, and we can clearly see that we have an impulsive move above the level, okay, above that high, and we have candle closes, multiple candle closes, at least 2 or 3 candle closes here above that level, okay? So 1, 2, 3 candle closes with bullish retests of that level, okay, as support. Yes, we wicked down a couple, 2 or 3 times even here, however, all the while maintaining this level as support, okay? And with the candle closes, okay? So then that would scream that this is going to continue up, the trend is bullish, and we go on to the next, okay? Same thing, then we have our next macro high right here, okay? So let's just take it from the candle over, okay? We had a temporary dip, just a higher low, higher low, higher low, okay? And we broke through, impulsive move up, a clean breakthrough, powerful move with multiple candle closes above. You can even count the one that broke out. Okay, so that in this case we have 4 candle closes above that previous high level. Okay, 1, 2, this thin doji here. Okay, but 1, 2, 3, 4 candles closing above with a bullish retest of this wick of that level. Okay, now it gets interesting. Okay, so we come up, we make another high here. Okay, so higher high, higher high. Okay. So let's just go from this higher high here, and let's see what happened, okay? We smashed up above it, okay? Candle closed above, and on low time frame, you know, on 4 hour or less kind of thing, there'll be probably multiple candle closes above this level, okay? And however, we came right back down, closed right at the level, and then it wasn't able to break, okay? So we did not get multiple candle closes above this level, meaning this was not technically a clean break. Yes, we made a higher high, right? But we did not break that structure, that level, okay? And so then obviously we had our dip here. And then just the same thing from this high, okay? We weren't able to break it here, okay? We came up, break back down, candle close above, back down, candle close above, back down, could not break that level, okay? However, then we had this dip, okay? And on an overall higher time frame, that's why it's good to zoom out, right? Yes, we're still making higher lows, but if you're coming into a bit more of a low time frame perspective, then you know you're getting these large dips down, right? And so then we reclaimed this level up here, okay? So if you can see, we'll take this out. This was a key level, okay? So we're kind of bouncing around in between. We reclaimed it, and then we had 3 bullish candles closing above that level. So we came back down, we reclaimed it quite quickly, okay? And then 3 candle closes above that level is a very powerful sign, okay? And we were able to flip this back into support, meaning that the trend is still intact. And here's just a quick example of why I like to stick with levels, okay? Is if you're just going solely based off of diagonals and trend lines, okay? So you go, oh, okay, yeah, we're holding the trend line, oh, we broke through the trend line. Look, we broke, okay, this is coming down further kind of thing. And then meanwhile, we came right back up and gained that level, right? And so yeah, you could also argue we reclaimed the diagonal quite quickly, but this could have been, potentially faked a bunch of people out kind of thing, right? So if you stick to these levels here, which they're everywhere. You can spot them kind of everywhere. You just play it level to level. I find it to be a lot more effective. So now let's just zoom out a little bit and see what we're seeing up here, okay? On our recent top here, okay? Okay, so right off the bat, we're seeing higher lows and higher highs, okay? Take this guy, the wick there, that's our high. Okay, so we made our higher high here and our higher low, and then we came back up to here. We smashed right through it. You might think the trend is continuing, came right back down below it, okay? Not a clean break, okay? Couldn't even break above it, wicks above, okay? These are, in my opinion, just bearish retests of this level, which is the previous high. So we're not able to break that and continue the trend, okay? So then over here, we reclaim that level, right? We reclaim that level over here as support, okay? We had multiple candle closes above. We had 3 here, dipped down previously, okay? So it's really undecided in this point. However, it did give us one more push back up to make a new high, okay? However, was not able to close above this high, okay? So you see here, we smashed right through it again, okay? Close, came right back down, wicked actually below it. Next candle, same thing, breaking down below it. This is not a breakthrough, not a clean impulsive break through that SR level, okay? And so then meanwhile, what we're seeing here now is you got to flip your view, okay? Is you got to start looking at the lows, right? Higher low, higher low, higher low, lower low, okay? This was very tricky because even to that rule here of having multiple candle closes below, this may not count, right? This one here that's kind of crossing over it may not count. However, we have broken that rule of higher lows being formed, right? So here you go, higher low, lower low. But just like up here, right? This was a higher high, right, in price, but it wasn't a clean confirmed breakout. And just like down here, not a clean confirmed breakout. So we still got this big pump up here. However, this is a telling sign that you should start to be more cautious that we've made this lower low. We've broken that trend structure, okay? And so then what do we see? Well, we talk about regaining that key level of support, right? We were not able to regain that level of support, okay? It came back up here, wicking above, candle closed temporarily above, could not gain it as support. So then this ends up being a lower high, right? So higher high, this was your higher high, and then your lower high here, okay? So this was your trigger here to be getting out, okay? And so then now when we came back down here to this level and lost this area as well, this didn't even act as support, that previous low, we broke down below, bearish retest. This is your key confirmation that we've broken market structure and this is coming down. And ultimately what people are doing when they see this lower low form is up here is they're just filling short orders or they're dumping their bags, right? So obviously a lower low leads to usually a lower high, right? So then that's just your downtrend, right? Lower lows and lower highs. And so up here, when you're thinking maybe we're reclaiming some sort of level, this was really just an area where people were filling shorts and otherwise getting rid of their longs. There we go. Okay. So hopefully that makes sense, you guys. Hopefully you can see that. It's a lot easier to see on a higher time frame. This is the daily chart, so each candle represents a day. And you zoom in on lower time frame, you can really get caught up. So that's my recommendation. I'll put in a couple of recommendations here. All right, there you go. Some recommendations you can screenshot if you like that I use. And I just want to thank you for joining and supporting the channel. I hope this helps you manage your risk a bit better. And if you can really understand this system, it'll help you in the long run. I know it will. The key to these things is having discipline and patience, waiting for confirmation, not getting caught up on lower time frame that ultimately pressures you to trade on emotion. So thanks again. check out my channel for lots of other helpful videos. See you in the next one. Adios.